I think there is also a bit of froth because everyone's just taken in by new technology. We have seen this happen over and over again, where financial innovations lead to quote unquote sort of bubbly assets and valuations. You know, when they correct, when some sense comes into their valuations, no one knows because no one wants to not be part of that bubble when it happens. Everyone wants to be inside because you don't know when the bubble is going to burst, and no one wants to not be inside it. Whether people understand crypto or whether they don't understand crypto, I can tell you a lot of people who don't understand crypto are also investing in it just because it looks to be a very attractive speculation at a time when other assets don't seem to be giving you a very high, safe return. I don't think so. See, fiat currencies are backed by sovereign capacities to do coercive taxation. And that is what gives fiat currencies their strength. They are certainly getting debased because of the extent of liquidity and money printing that is happening. That probably explains a part of why these other assets are, crypto assets are becoming in vogue. There are also some other reasons. Banks have been very unwieldy in shifting to better forms of payment. So crypto assets have offered better payment services. Banks have also been charging very high transactions costs, especially for remittance and foreign exchange transfers. Crypto assets have also become a preferred way of doing some of these transactions to avoid these transactions costs. And governments have also levied their own sort of value added or sales taxes on top of these bank commission charges. So there's a variety of reasons, payments related, transactions cost related, which are good reasons why some other forms of payment mechanisms have evolved, and crypto assets have taken some of this space. Let me not leave out here that I think there is an inherent tax evasion, money laundering, funding of drug trafficking, etc., which also happens through these vehicles. That also probably contributes to some inherent demand for them. There's also another class of crypto assets, which are the stable coins, where people are looking, and I think that's more because of people are concerned about sort of not necessarily getting enough returns on the fiat currencies, etc. But these stable coins are now pushing for borrowing deposits. They are pushing for lending their money out. They want to become the banks of future. And so I think there's a lot of things happening underway. I have no doubt that some of this is again froth. And this will sort of correct itself as the real rates don't remain so negative or switch into the positive territory in developed economies and in emerging markets. There will also be, I think there is also a bit of froth because everyone's just taken in by new technology. We have seen this happen over and over again, where financial innovations lead to quote unquote sort of bubbly assets and valuations. When they correct, when some sense comes into their valuations, no one knows because no one wants to not be part of that bubble when it happens. Everyone wants to be inside because you don't know when the bubble is going to burst, and no one wants to not be inside it. Whether people understand crypto or whether they don't understand crypto, I can tell you a lot of people who don't understand crypto are also investing in it just because it looks to be a very attractive speculation at a time when other assets don't seem to be giving you a very high, safe return. I think the primary risks to the fiat currencies, in my view, from crypto assets and investments in these assets comes on the financial stability front. See, historically, countries that had more porous capital accounts suffered when they had growth shocks because not only would there be a run on the on the banking system, but there would also be an outflow of this capital from the country. And that meant that you just had this horrible adjustment where you had to deal with a very sharply depreciating currency, high inflation, low growth, a defunct banking system. And, you were dealing with all of this at the same time. One of the reasons why emerging markets have put some of these capital shields or capital controls around them is because at least they want the currency to stay inside rather than being flying out of the country, so to speak, in search of foreign currencies. I think it needs to be carefully thought through by these countries and central banks as to what are the implications of investments in crypto for their capital account. Could money seek to fly out of the country through these cross-border transactions at a very quick notice? Could that put pressure on the currencies? Could that put pressure on the banks? If they try to counter this through introduction of central bank digital currencies, then does that risk deposits flying out of the banks into the central bank digital currencies? And what sort of a central bank lender of last resort policy should that lead to for the banking system when that happens? I think these are fairly challenging issues. If when we were at the central bank, we had preferred a slightly more guarded approach to the crypto assets. As a result of it, we had restricted banks from engaging on the other side of crypto transactions, but that policy was struck down. So in my view, the growth of crypto has been too quick. And I think that emerging markets are more vulnerable to their growth because when things get an external shock, there could be some external sector ramifications of these crypto investments. I would again recommend as a central banker to do a serious stress test, scenario analysis of what could happen. What are we talking about? What sort of things can fly out of the country? Where would the settlements be taking place? Are there parts of the banking system that we need to worry about when that happens? I think these are some important questions. For right now, I think everyone seems happy because everyone's bought some kind of a coin somewhere and it's appreciating in value. But, I hope it's not just like tulip mania. I genuinely hope that it has a softer landing as and when the froth corrects. One thing to keep in mind is that I don't think this activity will remain unchecked. See, right now, central banks were taxing foreign exchange transfers and remittances. If everything shifts to crypto, why won't they tax that? They will try to find a way to tax it. They imposed anti-money laundering rules on banking transactions. Eventually, if crypto becomes the way to do these transfers, those rules will come there as well. So I think my sense is the market is ignoring the regulation risk that this asset class faces. And that can come unexpectedly. It can come in forms that they have not anticipated. But if it's just a transaction cost arbitrage, maybe we'll switch to a better technology that crypto, blockchain, etc., digital payments are offering. But does that make it fundamentally so much more worth than the rest of the system? I have my own doubts.